giving the reaction to these levels. Okay, so let's look at the other. This is overlapping higher value. Overlapping higher value means trend is bullish, but it is exhausted and market may soon change the course or market may soon reverse. Okay, it doesn't always mean the market will reverse. Market may continue also the trade. Okay, so we just have to go with the price action. If the price action is calling the correction, if there is any price action pattern which is causing the reversal, which is telling you the reversal structure, and there is a value overlapping higher value is plotted, then you know this trend is exhausted. Now we should be looking for the reversal opportunity. Same goes for the lower value, strong bullish trend. Look for only selling opportunities. Preferred area to sell, value area low, previous days POC and CPR. These are the preferred levels. Same for the higher value to buy. CPR, higher value, value area high, and POC. These are the levels to look for to buy for the buying opportunities in this case. Okay. Same overlapping value. Look for. It is a still bearish, but market is exhausted. The downtrend. So it may go for the sideways. It may give you the selling opportunity. We don't know for sure, or it may just reverse the trend. So we just have to go with the price action. So the structure, it doesn't mean, see, the most high probable structures are unchanged inside higher and lower. That doesn't mean these three doesn't give you much value. It will give you. Okay, we just have to understand, and with the experience, you will start to identify the opportunities. Okay, so now let's see on the chart. As you can see, after this higher value, this is also higher value area. Okay, see this higher value area, it's slightly above the previous day's value area high. This day we got this call side move. Okay, the blasting move that we caught on the for the call. Okay, see, where did we identify the call? It was not breaking the value area low of the previous day. Decisively, I said. Okay, read the even if it breaking and then bouncing, there was some kind of CPR. Okay, I also added the CPR with that. It is not breaking decisively. That is 52,730. I hope this is the level I shared with all of you. 52,730. It did not break it decisively in any of the candles. Okay, and later bounced, and then we got this bounce in the call side. Okay, because the area was value area high. Also, CPR is the same, higher value area. So why should we be looking for the selling opportunities? Look for the buy. Okay, now what has happened here? These 2 days formed an overlapping higher value, meaning the trend is now exhausted. Finally, okay, we should see some correction. And why we were inclined towards the downside, especially because not the upside, because after this up move, Bank Nifty fell down sharply and did not manage to recover again. Okay, so this is the reason expected the selling below which value area low. This is the level we shared, 52,800 and 52,880. Okay, if you look at the 52,880, this was the level I shared precisely, not this one, but this was the final level for the breakdown. But if you look at the POC, once it got broken, this one, okay, once this got broken, it gave a pullback, could not manage to break above it. And then look at this. So when you have a view and one of these three levels are acting as a support and resistance and giving you the breakdowns with decisive breakout candles, that is candles breaking with more than 50% body outside the level, these will be the high probable trade opportunities for you to go for that direction. Okay, why would you not go for the upside? Look at this. Even if it's bouncing from the value area POC, it is still below the value area high. So unless and until it is not broken, we will not be looking for the buying opportunity. Okay, and followed by it has to also break the value area high, or we could have attempted the entry until the value area high, previous day high as the target, but it is rejecting at the value area. Hence, it broke this POC, trigger for the sellers, retraced, pulled back, and then continued the trade. This is the volatility I mentioned. Don't look for this, avoid for the Bank Nifty, look for the Nifty only. Okay, in Nifty, we also got good opportunity. Okay, so you can see, but whenever such breakouts happen at this level with a spike, always try to enter at the retracement around as close to as this level, because if there is a spike, market will most likely to retrace towards this level. Okay, so if you see, I will show you one method how to execute these trades using this volume problem. Okay, so let's say I was looking at the 53,000 put. Okay, so this is the 53,000 put. I have just observed, I didn't trade this, right? I just observed how I could have traded this setup. Okay, so if you see, this candle broke the POC in the bank nifty. It also broke its strikes yesterday's POC with the strength. Okay, now if you see at the indicators that we use, if I'm buying here, so just a second. Okay, if I want to buy here, I will not buy at this candle. Okay, I will wait for the bank nifty to retrace until this level. When it retraces and rejects again, then I will look for the selling opportunities, or as soon as it is close to this. Okay, I can enter at this candle as it's closing. I can enter at this candle. Okay, do not enter at this candle, because it is bouncing from the 200 moving average. Okay, it again bounced, now again rejecting at the same POC for the second time. This will be your better entry. And at the same time, you can notice the strike is also bouncing from its 20 EMA. And this is a confluence of the opportunities. Or once again, you can wait for this value area high also to be broken. This is somewhere around 520, 500 range, you will get an entry. This will be your stop loss. And look at the aftermath. So use a confluence of the methods. Find the levels. 9. Use these levels according to the other factors. So you have to read Bank Nifty futures chart along with the strike chart as well with the same aspect. Okay. Now, every day when the market is closed, I also observe the closing of today's market, where it is closing according to the direction. Okay. Now you can see this is the value area of the previous day, and it has closed below its value area. This is a bearish sign. Okay, it is closed below POC. If it closing below value area, it automatically closing below POC. Okay, so it is closing below YPOC, that is, or below value area itself. Along with that, the CPR also, the tomorrow's CPR, it is also closing below CPR. All the data points indicating the bearishness in the market. Okay, hence the market is turning slightly bearish at this point. Finally, and we can expect a good correction in the upcoming days before the market moves up. Okay, you can see this is the outside day. There was inside day a few days back also. Yeah, look at this inside day. See, this is the inside day relation. Okay, and now look at this. After this inside day relation, it opened slightly gap up, slightly flat completely, tried to bounce. It did not fall down, and it is after this breakout, it's supporting at the value area low and bounced here, giving you a jackpot opportunity. Why? The contraction was happened previously in terms of the volumes. This gives you the opportunity to look for the trades with bigger targets. You can simply chase it. Okay, chasing it means trail it, not like enter here or here in between. No, always try to. You can keep, let's say if you enter after this initial balance and the prices pull back and break out, look at the candle structures. Bullish candles are forming at the value area low. This is a healthy sign. It is accepting the support with conviction. Price went all the way. You can keep a target as a POC first. If it's breaking, keep on trailing until your trailing stop loss gets set. Okay, simple trailing method to use in such case is that keep on trailing your stop loss to every bullish candle. This is bullish candle, this is bullish candle, every candle is bullish candle, and your trailing stop loss got hit here. Not even, see, I will show you. This is your trailing stop loss. This is your trailing stop loss. Now this is your trailing stop loss. Okay. Now there is no bullish candle formed yet after this. This is also not a bullish candle. Why? Upper wick is bigger than the lower wick. Okay. So you will not trail your stop loss to this level. You will trail your stop loss to this. This is a bullish candle. Again this. Okay. Then your trail. You trail this. Upper wick is lower than the upper wick is smaller than the lower wick. Okay. So this is a bullish candle and your trailing stop loss gets hit. So this way, when the trend is strong, you can exit at the top of the trend without any panic. So learn to hold. You will get bigger profits. If you don't know how to hold the trade, you will never understand how to make big profits. Okay, so always try to hold on to, learn to hold, when to hold. If I have an inside value area, I should be looking to hold. If I had an outside value area, I will look at the fixed targets. That's simple. That's as simple as it is. Okay, see, higher value area, next day went up. Okay, so I don't know why it's not updating, so I can't tell. Look at this, 4th June. See, this is the 4th June. Look at the selling exactly from the POC. This is the July chart. In June chart, it was exactly from this level. This week was not even slightly higher than the POC. Exactly, it made high at the POC of the 3rd June candle and started dropping from there. Missed the wonderful opportunity I also mentioned and given you the trade structure on that day also. Okay, how we missed the good opportunity due to the event. Okay, but it will not happen in the future. So whenever we get such opportunities, we should not be missing. Okay, this is also opportunity. On 1 minute time frame, it gave a wonderful pullback and continuation. Look at this 5 minute time frame. Simple pullback and continuation. You just had to hold on to this trade. Okay, we don't care if that what was the election result and all. Okay, all we need is the outcome of our trading opportunities. Okay, what happened? Government retained the NDA government retained the power, and we got a recovery. And market is now again at all time. Okay, so right now what has happened? The market is exhausted. In the bank nifty, we have got a good evening star pattern. This is one of the high probable patterns, and I'm expecting the spot to come until this level, which is again a virgin CPR. Okay, so virgin CPR is also same as virgin point of control. Okay, it also attracts the price, but I don't keep virgin. You can get virgin CPR as many as you can. Okay, so what I do is I always keep virgin CPRs only closer to the current market price. I will not look for the virgin CPR here. I will only keep this one. If the price is coming to this level, then I will add this one. Okay, so right now I only have this virgin CPR. So I'll just look at this one. Okay, and one question remains: how much in the past or how much previous virgin point of controls we can track? There is a debate. Okay, typically as per the book, the author says you should not be looking the virgin point of controls older than a month. Okay, max to max. But there are also people who says you can use the virgin point of controls as long as you can. Okay, you can go as much behind, as much in the history as you want past. Okay, it may or may not work. We don't know for that because it starts to lose the credibility. Let's say this is a July futures chart. Okay, I'm using this July chart, and after July 31st July, this chart is going to expire. Okay, you cannot trade in this chart. So people may ask if this virgin point of control is still valid. If the chart is itself expired, the contract is expired, how you will be expecting this to be valid? Read the next expiry. If the same level as a virgin point of control is still valid there, use that. Okay, so I like to keep it on the chart, and in monthly chart you don't get more than a month of the data in itself. Okay, so that's the reason also once again to use the monthly chart, not the continuous chart for the bank nifty or the nifty. Okay, so automatically you will not be getting too much old data as in terms of the volume version point of controls. Okay, so that's the thing. Okay, so now that's all about the volume profile in today's session. If you have any questions, feel free to ask.